Hi, my name is Dan Elitzer, and I'm co-founder of Nascent, a global multi-strategy investment firm focused on crypto and open finance. I've been building and investing in this space for about 7 years now, and one of the things that has always intrigued me has been the impact of pseudonymous individuals, obviously dating back to Satoshi Nakamoto with Bitcoin originally, but there have been many others that have come since, both builders and active contributors on forums and on Twitter, who really have had a major impact in this space. And so I decided to try to highlight some of the work of these pseudonymous individuals in a way that felt more real and more human than just reading it on a screen. And so today we're going to do an interview with Molly Wintermute, the founder and solo core dev of Hegic, which is a permissionless options protocol built on Ethereum. Now, full disclosure, I am and was a early investor in Hedgic, so I do have that conflict of interest that I want to make very clear up front. But Molly has been this really enigmatic character that has gotten a lot of attention for her style and also for the impact of the code that she's shipped. And so I'm really excited to bring Molly to life in partnership with a company called Alethea AI that helps to create these virtual avatars that are able to speak and interact in a somewhat realistic way. So I did this interview with Molly via text and then shared the transcript with Alethea, and they were able to actually bring Molly's avatar to life to have this interview and have this conversation. So if this goes well and there are other pseudonymous individuals out there who are interested in doing a little more of a real interview rather than just doing it on text, I'd love to expand this format and include more people in it. So without further ado, Molly, thank you so much for joining me today. Can you please introduce yourself and Hedgic?
I am a solo core dev of the Hegic protocol. I've released it on 20th of February 2020. I have no background but my open source code on GitHub.
And what is Hedgic?
Hegic is an on-chain peer-to-pool options trading protocol built on Ethereum. You can trade wrapped Bitcoin or Ethereum call and put options on Hegic. You can also earn premiums in wrapped Bitcoin or Ethereum as one of the hundreds liquidity providers who are pooling their liquidity, which is used to sell options acquired through the protocol.
So why did you choose to work on and launch Hedgic pseudonymously? Do you think that more developers are going to make similar choices in the future?
I am thinking of it as of holding a global scale experiment on how humanity reacts to a solo female founded protocol, which has nothing else but one person and code behind it. Pseudonymity doesn't make a person good or bad. Some people might think that it has some benefits, but a bad actor behind a pseudonym falls like a house of cards 10 times faster than an ordinary person, while she has to make 10 times more good decisions for being at least in the same league with others. I don't think that developers choosing this as a rational way to build something making a good short-term decision.
So then you wouldn't generally encourage other developers to build and ship things pseudonymously.
We have one Satoshi Nakamoto and millions of cryptographers, economists and financiers worldwide. These people might think, yeah, I'll be like Satoshi and will build something as important as he did. In fact, she is just an average Alice who can't do it. History is not linear, and no one can copy neither Satoshi Nakamoto nor Molly Wintermute. Developers should ship code that other people can use as a product right away and who will love it. This is the only thing that matters in development, not pseudonymity or person's background.
Agreed. And so what really matters is, can you build something that people actually want and ship it and get it into their hands? And Hedgic has seen really impressive traction. You got to what, like, was it, I think 40 million in deposits in the liquidity pools and 400 million in trade volume. Was that right?
38 million in monthly volumes, actually. I'm making these videos in InShot app on my iPhone, which I tweet out in Hedgic Twitter account. This is the latest one with Hedgic's achievements in the first month after V888 beta release.
Okay, thanks for the clarification. That's very impressive. So thus far, you've only had Bitcoin and ETH puts and calls that are being sold. So, that's just two assets. There are, many hundred thousands out there now. What are the plans going forward? Are you going to add more assets? Are you going to add new features? What's this going to look like?
Yes, I'll add more options contracts in 2021. My long-term vision with Hegic is building a new financial primitive, which I call hedge contracts. Hedge contracts will automatically hedge product traders and asset holders' value of holdings with options. When people buy a house or car, they always buy an insurance. I want people to do the same with their crypto assets and stocks. Millions of people act like they're crazy. They are spending real money buying stocks and crypto, but have no value protection in case if the price of assets goes down. It's like seeing a brand new car or a new house burning every quarter or so when there's a correction on the markets. This is not the right way to manage one's finances, which directly impact people's future.
That's very admirable. But if one side is being protected against loss, that means by definition, some other party must be having increased risk, right? Like there has to be an LP or someone that's taking the other side of the trade and taking on more risk as a result.
Right. However, there are always people on the market who want to buy and those who want to sell at the same time. The challenge is safely pooling money in one place that can be used for selling hedge contracts. We have huge insurance companies worldwide with trillions of dollars on their balances that have the similar business model. They are accumulating money in one place and then selling this money with a premium as an insurance. Hedge contracts can work well, both for buyers and for sellers. I need a couple of years to prove it in the real market, not on paper.
Totally agreed. And I think it's really all about finding the right way to pool risk and make sure those things are very clear to the people who are taking on that risk. And I love the orientation towards testing these things in practice in the market, not just on paper. We really need to see how it works. So speaking of which, you actually recently announced the launch of the collaboration with Andre, creator of Yearn, and this kind of Molly and Andre fund. And so you're going to be backing, I think you put $3 million towards backing builders out there. So you're also, sounds like, collaborating with him on code. And so I guess my question is, are the things that you're working on, I know you're going to be funding a wide range of things through that, but are the things you're working on with Andre all going to be tied into Yearn or tied into Hedgic in some way? Or do you see potentially launching something that's completely disconnected?
I've decided to start the M&A fund as a treasury management institution for a fraction of funds that I've attracted during IBCO, and initial bonding curve offering is not an ICO. Please do your own research. Andre agreed to start supporting developers alongside with me. Both me and Andre are developers, not VCs. We are completely different people, and maybe we have only one thing in common. We know that real development is extremely hard. Andre has been leaving crypto like 2 or 3 times because people all over the world have been criticizing his free and open source work. He had literally received life threats while being a developer. Not even a politician or billionaire. My code was hacked from technical and economical vectors a number of times, and I had to make refunds using the last money I had to people who had losses. I was scapegoated in the crypto public space like a nonsense dev who can't build anything without being hacked. Molly and Andre Fund can support lonely, desperate developer scapegoats like ourselves with a few grands of money and a few kind words from both of us. This is enough for a developer to ship her first alpha-beta version and see whether the world needs it. It doesn't matter whether she builds something for Hegic or Yearn. Me and Andre can deal with Hegic Yearn things by ourselves without any fund. M&A is a way to support other hardcore developers in starting their own Hegic or Yearn, not to improve our protocols.
So you mentioned the hacks that happened with the early versions of Hegic and how you refunded some of those early users who lost funds, which I think was great. It's over and above what people should expect when interacting with some of these very early, honestly very risky DeFi projects. But given what you've learned through that process, how should founders think about best practices and approach audits and stuff for early stage projects when they're launching them?
Honestly, I don't know how to help founders with the security part of their own protocols. I started to learn Solidity programming language this February. The biggest problem I have experienced is unknown unknowns. You never know all the ways that hackers can attack your code. The only piece of advice I can give is to start with a very small code base and with only essential functions in place.
That's good advice. So what are your thoughts on the broader DeFi ecosystem? What do you think people are largely doing right? And what do you think that developers and teams building in the space should be doing differently?
We will all understand this only in the next 5 to 7 years. Nobody knows now what's right in DeFi. I think that the most important thing that hardcore developers should do is to forget about valuations or money-related things and build a product that can be used literally in this week. If you're sitting alone with a pitch deck with your magical DeFi project's logo on the first page and waiting for a VC to write you a check at your fair 50 million pre-alpha, pre-money, pre-anything valuation, you've already lost. Scapegoats are coding while you're talking. Nobody remembers pitch decks from the dot-com era, but everyone remembers Netscape and Mark's code behind it. The same things, code, product, users, will matter in the next 5 to 7 years in DeFi.
Totally. We are building for posterity. So is there any final message that you want to give to users and builders of DeFi protocols?
If you have a DeFi-related idea that you're dreaming of at night, build your first ever product piece of the protocol in this week. Code an interface. Connect your code with an interface. Test it by yourself, and if it works in Ethereum, testnet, mainnet, send me a DM on Twitter. Or send an email at mollyandre@protonmail.com. I'll be happy to play with your code and provide you with a couple of grands. Nobody knows what DeFi will become. Hopefully someone in this space will build something big and meaningful. Satoshi made crypto happen at a global scale. Someone might make DeFi happen at a global scale in this decade. Only time will tell. Sorry, I need to code now. Thanks for this interview.
All right. Thank you, Molly. Really appreciate you taking the time and joining us. And again, thank you everybody else for listening in.
Pleasure, Dan.